Hey, business owners, welcome to lesson four of Dear Business Owner, the accountant series, really geared towards all my business owners and entrepreneurs to really help you kind of, get it together and better understand different functions of your business from an accounting and tax perspective. Okay. So this week we're really talking about business entities, really. Yeah, because what happens is it's important to know, if it's right for you or not. So for a lot of you, I want you to keep in the back of your head, well, a couple of questions, if you will. When you file your taxes, do you ask yourself, well, why do I owe so much? Or do you ever ask yourself, am I operating under the right entity? Right. So there's a lot of times that I come up against other business owners who are wondering these same things. Why do I owe so much? Why am I under the right entity? So there's a lot that goes into that. So you want to make sure that you pay keen attention to the different areas that I'll be touching on. And now this week is we're looking at business entity as a whole. In the coming weeks, I'll be breaking it down per the actual entity so that you can have a better understanding of each, and then of course make your own decisions based on that. Okay. So, with that being said, my name is Rose Brown, also known as the accountant therapist, and I am the CEO of Brown's Fulfillment Consulting and Accounting Firm. Okay. And as I mentioned, their business owners is really here to kind of help you get things straight. When I work with different business owners within my line of work, it's just a lot of different things that I see that they could be doing better, or honestly from a lack of knowledge they just don't know better. So the idea here is to help you gain that understanding, or insight, if you will, into your business from an accounting and tax perspective. Okay. Now, as I mentioned, this week we're talking about business entities and determining whether an entity is right for you. It's important to know, and this is really a disclaimer, this is not legal advice. This does not stand in the place of legal advice. It's more so informational, because when it comes on to business entities, one size simply doesn't fit all. So as I provide you with the information, think about it, think about your needs, think about the real questions that I'm asking, and then go to the table and determine what works for you. But at the end of the day, you want to sit with a professional like myself and go through everything. You want to make sure you comb through the nuances, the pros, the cons. What really are you looking for? So we'll talk about those things today. All right. So the first thing we want to do is actually break down what is a business entity, right? So a business entity is any organization that has been created to conduct business. It could have been created by one person or more than one person, right? But it was created in an effort to conduct business. So you want to keep that in mind. And a couple of popular entities, if you will, are your sole proprietorships, LLCs, or multi-member LLCs, your partnerships, your corporations. Those are the most popular ones, right? But while we identify those, it's also important to know the difference between your business slash legal entity versus your tax entity, right? So it may not be the same, it may be the same depending on how you're operating, right? So all those things that I just mentioned, the sole prop, LLC, partnership, corporation, those are usually your business entity, right? When you switch over to a tax entity, you're literally electing that status, right? You're saying to the IRS, hey, I want to be taxed as such. And usually you're sitting under the umbrella, a legal entity, under the umbrella of sole prop, no, not sole prop, actually, a LLC, or a partnership, or maybe or C Corp, and you want to elect an S Corp status, right? The S Corp status is not a legal entity, it's a tax entity. So that's something that's really misunderstood by a lot of people. So you have to note that you have your own entity, your business entity, to which you initially told the IRS, hey, I'm an LLC, hey, I'm a corporation, hey, we're a partnership. Then you can look to electing to say, hey, I want to be taxed as such, right? I want to be taxed as a S Corp, I want to be taxed as a C Corp. So you have the option to elect a tax entity, but your legal entity stands. So that's a common misunderstood comparison right there. Okay. So with the business entity, as I mentioned, one size does not fit all. It doesn't matter if the person down the road has a certain entity in the same industry and they're doing what they're doing. That doesn't mean that's going to work for you. Even if your friends or family say, hey, do an LLC, do a corporation. No, do not take that at face value. You want to look through all the different areas of what makes an entity right for you. Okay. So, with that being said, let's think of a couple of things that you can use to further assess the process of establishing that entity, right? So you want to think about items such as, well, how do you want to pay yourself? Do you prefer to have a flexible way of paying yourself, or maybe you're disciplined to where the way you pay yourself is whatever you need to in order to have the highest tax benefits, right? What about future compensation? How do you foresee yourself paying yourself in the future? Do you want benefits from the company? For example, a 401k, retirement account? Do you want health insurance? Those sorts of things. So you have to keep these things in mind. Okay. And then you also want to look at the tax impact. Are you okay with having a flow through entity versus an exclusive entity? So let me break down what I mean by flow through and exclusive. So, well, I'm going to use independent instead of exclusive in this situation. So a flow through entity is pretty much all entities except a C corp, right? And what that means is the business itself technically does not pay its own taxes, right? Its activities flow through to your own personal return, or if it's more than one person, per the interest or the percentage ownage of each person within the company, that's what it flows to your personal. So whatever activity of the company, it flows through to your personal, and you're the person who is responsible for paying those taxes. And those are usually your personal income taxes, not a business tax, right? Whereas if you have a C corp, the C corp is ultimately responsible for all its taxes, right? It files its own tax return, it pays its own tax return, those sorts of things. So you want to keep in mind, I've had clients in the past where they're like, hey, I do not want the business activity to show up on my personal. I want to have complete separation. Okay, great. That's a huge thing to keep in mind. Or some folks may say, hey, I want to show a higher income because I want to purchase a home, I want to purchase real estate, or I'm trying to get a loan from the bank or something like that, and they need to see my numbers looking a certain way. Even if it's not for, let's say, next year, the year after, they want to see higher income. So folks may want to have a flow through entity, right, where that net profit is showing up on your personal return to kind of boost what your adjusted gross income looks like. Okay, so the next thing is, well, will it just be you or other people joining the company? Meaning, are you the only owner, or will there be another person? It all depends. Again, right? If you guys decide, hey, LLC is better, you're going to be taxed a certain way. If you decide a C corp is better, you're going to be taxed another way. And that's why if two or more persons are involved within starting up the business, you guys have to have to be in every meeting together to make sure that you're determining what entity is better for you, because one person may have a certain circumstance where another person doesn't have, and they may not feel the same way how the end result comes out based on a tax perspective or how they choose to pay themselves. So you have to make sure that if it's going to be two or more persons, so you and another person starting up this company, you guys are having these hard, tough conversations, addressing the elephant in the room, because you guys aren't necessarily living under the same circumstances. So it may not be the same. Okay. Another thing to consider, well, do you need asset protection? Do you have things that you want to protect? Do you want to protect your personal assets, right, from what the business has going on? That's another huge component that you have to consider, because a lot of folks may choose to start out as a sole prop, where of course you have no liability protection. You're literally out in the open. Anyone could, come and take grabs, if you will. But other entities provide you with that liability protection. How much do you want, or how long? You have to determine that based on your situation. Okay. Um, Another thing is, when you go to choose your business entity, right? It's not just, oh, I'm going to do an LLC and that's that. Absolutely not. Choosing a business entity is a strategic move. You don't just wake up today and choose it. You have to determine the facts and circumstances of your situation. It's not about your friend, your family, or the next business over. It's about what's happening here. What do I need? What do I want? That's how you're going to determine. And then a lot of times when it comes down to taxes, the business entity plays a major role. Okay, so you have to make sure that you take that into serious consideration. All right. And another thing, and this is something that I oftentimes bring up to my clients when they're looking at, say, even starting a new business, or they're new to me and they're trying to figure out what's better for them, right? The first one of the first questions I ask them is, hey, where do you foresee yourself in the next 2 to 5 years? And that's a very critical question, because when you create an entity, you're not creating it for today or this year. You're looking to create it for the future to come. So what's going to be happening in 2 years? Will you be having another business? Will you be investing? What do you want to do? Do you want to pay yourself differently? Are you going to be hiring folks? Do you want to offer benefits? There's just a lot of different things to keep in mind. So it's not about now when you're creating an entity, it's for the future to come, all that you have going on, and the strategies that can be put in place now to be proactive about the future, essentially. Okay. And even with that, you want to keep in mind for building wealth, right? Do you have children? Do you want them to play a part in this? How can they play a part? Because a lot of folks will say, hey, if I pay my child, I don't have to pay as much in taxes or something like that. That's a strategy. There's a strategy behind that. And you can't be any entity and pay your child and not pay those Social Security or Medicare taxes, right? You have to be a specific entity, a specific type of entity, in order for you to be able to pay your child and avoid that Social Security and Medicare taxes, right? So it's very important to keep that in mind. Okay. And like I said, don't do it based on now. Now is just now. When you go to file your tax return in 3 years, when you go to pay yourself in 3 years, those sorts of things. Do you want to phase out of the company at a certain point? What do you want to do, not today alone, but to come? Actually, let's not even focus too much on today when it comes down to the business entity, but the future to come. Okay. All right. And another major thing you want to keep in mind is the formalities that come with operating a business, really, and setting it up. Different entities have different formalities that come with it. Some have a lot more formalities, for example, a C corp versus an LLC, where it's not as much. With a C corp, you have to do your bylaws, your annual meetings, those sorts of things, whereas the LLC, you don't have that many stringent things that you have to take into consideration or keep up with. You just want to make sure that you're doing your annual filing like you should, or if you're in a state where you need to be paying your franchise tax fee, that you're paying your franchise tax fee. Okay. Because starting a business looks different than maintaining it and then closing it or dissolving it or selling it. Whichever you decide to do, the formality looks different. So you want to, again, think about the future. Will I be selling in the future? Do I want to phase out and receive passive income? What do you want? And sometimes it's tough to, kind of sit now and think about, oh, 2 years, what's going to happen then? But at the same time, you want to have a goal. You don't just start a business just to start a business. You want to start it with a strategic approach in mind. A friend of mine likes to say, chess, not checkers. So that's what business entities are all about: chess, not checkers, because it's the long term, not just today. Okay. And that's pretty much it for this week, right? So I talked about business entities from the perspective of determining whether or not one would be right for you or not, right? So you want to ask these questions. You want to take into consideration what it is that you need. Do you have family? Just so many different things come into play. When I sit and have these conversations with clients, it get a little bit personal because I need to know what's going on in order to help you determine the right entity for yourself and your current circumstance, right? So you want to make sure that you take into consideration all that you have going on in your life. So with that being said, business entities, we just had an overview today, right? I'm going to do a part 2 and a part 3. In those segments, I'm going to do comparison and really dive deeper into each type of entity. So next week, I'll be talking about sole props in LLCs, and what it means if it's just you versus you and another person, and all the different aspects of it, right? From a tax, paying yourself, bookkeeping, all those sorts of things. I'll be diving deeper into it. And then the week to come, I'll definitely be doing corporations, because that's another important topic. So for the next 2 weeks, I'll be doing a part 3 segment, really diving deeper into each type of business entities. Okay. Well, with that being said, don't forget to share, comment, subscribe. Let me know if you have any questions. And don't forget, this is not independent of any actual professional legal advice. This is pure informational. You want to make sure that you go to a professional like myself to talk through your own particular situation. This is just to get your antennas up and go and start thinking. And especially even if you have a business idea in mind, or you already started operating and you're just not sure if you're really doing it under the right entity. And in addition to that, what happens if you have two or more businesses? Trust me, that's when things begin to get a little bit more complicated. And that's why your business entity is so crucial. If you're planning on having multiple businesses, it's a lot that goes into it. Okay. So that's it for this week. I will see you all next week. And don't forget, follow me on social media platform at The Accountant Therapist. And then as for my company, Brown's Fulfillment Consultant and Accounting Firm, we are at Brown's FCA. So I will see you all next week. Have a good one.